Mayuresh Joshi of Angel Broking joining in. Mayuresh, hi. So, global markets are completely focused on what's going to come out of Jackson Hole. But nevertheless, as we wait for that global event, what do you make of the weakness that we've seen today?
Evening, Surabhi. I think today's weakness was more to do with expiry and the expiry-related events, which probably saw some profit booking on the bourses. But largely, I think if you look at the holistic picture, the earnings have been quite reasonable. I think it had been a mixed bag, but they are showing signs of revival. So the entire take is the second half should see some amount of respite coming through from the corporate earnings front, based both on the factors that monsoons are good, the discretionary spending will increase, the seventh pay commission will also add boost to the consumption spend. Having said that, probably I think what happens with the Fed meet is an important global event, and again any movement on the Fed rates over the next few months will have some amount of tremors probably in the global markets, specifically the equity markets, and that probably will have some amount of consolidation or profit booking across bourses, because a whole host of markets have moved up significantly and valuations again are not too cheap at this point of time. So again I think consolidation is the theme probably for the Indian equity markets. Any correction that we probably see, if it comes through over the next few weeks, can be seen as a buying opportunity, selective stocks that investors were wanting to buy, and that correction will also make the multiples a little bit more cheaper than what they are deriving at the current moment.
Apart from valuations, Mayuresh, is there any other reason or any other cause of concern you think which is leading to this decline?
No, again, Surabhi, I think largely the move that we've seen right now across global markets, including India, is more to do with the kind of liquidity push through that we've been seeing. As I mentioned earlier, I think for the markets to re-rate from these levels, because again valuations around 17.5 times forward earnings are quite there around 3 and 5 year averages. So long-term averages, probably the valuations are quite fair to say the least. But again I think corporate earnings should revive, which I've mentioned should start seeing some revival in Q3. Capex cycle again would largely depend upon how the environment probably moves up and how the macro data points move. So looking at the data points that we've probably seen so far in terms of IIP, if we see some consistent trend happening on that front and inflation cooling off because of good monsoons, you will see the private capex pick up in the second half as well, which would lead to corporate earnings revival, and that would be the key point. But again I think till that point of time I think you'll have to wait one more quarter, and again I think global cues will probably determine the fate of the markets in that time interim. So largely I think India is well placed, well poised within the emerging pack, strong forex reserves, the reform processes are on. Because of the reform processes we might have actually a sovereign rate upgrade, which can be a huge positive for our credits rating. So largely I think a lot of positives for the Indian markets, but from a short-term perspective we might just consolidate in this range.
All right, on that note,